Fatih, running a business alone is getting tough. So many challenges, competition, taxes and permit.
Exactly, Maryam. I feel like I'm fighting all this by myself. It would be great if we had a platform to share knowledge and support.
Fatih, Maryam, wow, it's been ages. Still running your businesses?
Yeah, still running the business, but it's getting tough.
A coincidence, I just learned about trade association.
Association, how does that work?
Yeah, you both could actually start your own trade association, something for small businesses like yourself.
Really? We can do that? What's the benefit?
A lot actually, but one of them you can get tax exemption for some type of income.
Oh, that's great.
Do you guys want to know more? Let us explain.
According to Public Ruling Number 6, 2005, trade association can be defined under Section 53, Subsection 3 and Section 53, Subsection 4 of Income Tax Act 1967. Any association of person, partnership, or of person and partnership formed with the main object of safeguard or promoting the business of its members. Trade association should be deemed to be a body of person and not a partnership. An association would be regarded as a trade association under Section 53, Subsection 3 if it fulfills the following conditions. First of all its members must carry on a business. The main object is safeguarding or promoting the member business, or the main object is developing and advancing the member profession. Even if members include both business owner and employees, it still qualifies as a trade association. Resident status determined by reference to the management and control of its affair or business. Its management and control of its affair or business at any time during the calendar year is exercising in Malaysia, then the trade association will be resident in Malaysia. Once resident status of trade association is established, it will be presumed as resident until the contrary is proven. In other words, trade association is considered resident in Malaysia if the management control of its affair exercised in Malaysia at any time during the calendar year. Once established as resident, it remains so until proved otherwise. Example of trade association is the Malaysia Insurance Institute, the Malaysia Institute of Accountants, and the Chartered Tax Institute of Malaysia.
Now, let's look at the tax rates for trade associations. Trade associations are grouped under something called a body of person, and they are taxed just like individuals. So, there are two situations. If the trade association is a resident, it will follow the normal tax rates, like the individuals. We call this as scale rate. But if the trade association is a non-resident, it will be taxed at a flat rate of 30%, no matter how much the income it earns.
Next, I'll present about the accessibility of gross income. Gross income refers to all income received or earned by a person or organization during the business year that is subject to tax before any deductions or expenses are taken out. Trade associations are usually non-profit, but they still receive money from different activities, and these are considered gross income if they fall under the categories listed in Section 4 of the Income Tax Act. The first one is sources of income. When a trade association earns money, there are two types of income that the tax authorities look at, which is deemed business income and investment income. Deemed business income is money collected from members like membership fees, subscriptions, seminar fees, and other contributions. Even though the association is not a normal business, these are still taxed like a business income. According to YEF Year Assessment 2003, all associations must close their accounts by 31st December to match the tax assessment system. If the association makes money by trading with non-members, that income is also taxed but under a different category. And if the association uses machines or equipment for its activities, it can get a tax deduction for them. It is called a capital allowance. The second one is investment income. This includes income from interest, rental or dividends. This type of income is taxed based on individual sources and is covered under a specific section of the tax law. Now, let's talk about donations. Trade associations may also receive donations, but not all donations are treated the same for tax purpose. There are two types of donations, which is special donations and subscriptions. Special donation is a donation received for special purpose like fixing or improving the building, and it is not taxable. This is called a capital receipt. And for subscription is a general donations such as special subscriptions that given from members for festive events or other general purpose. It is treated as income and is taxable. But if the association spends money related to that donations like buying decorations or food, those costs can be deducted from the income. Lastly is deduction tax under Section 53 Subsection 2 Subsection B. Any outgoing or expenses incurred with the sums receivable or revenue account are deemed being incurred in the production. It means that if the association spends money to earn income, that expense can be deducted to reduce the amount of the tax that they need to pay.
Next, we are going to explain about the income tax exemption which is applicable to the resident trade associations. When a resident trade association collects subscription fees from its members, this income is tax exempted. That means they don't have to pay the tax on the money they receive from the members' subscriptions. But take note that the entrance fees are not exempted. They are still taxable and must be included in the tax calculation. Now, even though the subscription fees are exempted, there's an important condition to remember. If the association has common expenses like operating costs that apply to both exempt income and taxable income, and if they also claim capital allowance, they cannot claim everything fully. Instead, only a portion of those common expenses and allowance can be deducted. This portion is restricted based on the proportion of gross income from the subscription fees. In simple words, you can only deduct part of the expenses based on how much exempt income you have compared to your total income. Now, the amount of statutory income shall consist of the amount of gross income from members' subscription fees reduced by two things. First, it is reduced by expenses that used to produce that income. Then, it is reduced by capital allowance under Schedule 3 of the Income Tax Act. So, basically, we calculate the statutory income by taking the gross income and subtracting the related expenses and capital allowance. Now, let's look at how to deal with the common expenses and allowance we discussed just now, which are shared between exempt income and taxable income. Since only part of the income is tax exempt, we cannot deduct the full amount of these common expenses. Instead, we must calculate how much of the expenses are related to the exempt income. To calculate these expenses fairly, we use a formula A times B divided by C, where A is a common revenue expenses, B is gross income from subscription fees, and C is gross income from business sources. This formula helps us figure out how much of the common expenses should be allocated to the exempt income.
Now, let us start to calculate the statutory income. The formula is the income from the business activity will be minus with all expenses to generate the income. For example, the seminar fees minus with the rental seminar hall, and then we deduct with the common expenses using a restricted formula as I show you in this illustration, and then after that we get the adjusted income, and after we get the adjusted income we can minus with the capital allowance, and then we can get the statutory income. Now let me start with the calculation, and the first step is the revenue expenses are to be a restricted formula. For the first step, revenue expenses, the formula is A multiplied with B divided by C, and then for the common capital allowance, B multiplied with B divided by C, and then for the A is the amount of common revenue expenses, B is the amount of member subscription fees, and C is the amount of income business source, and lastly D is the amount of capital allowance. Now let us start to calculate the statutory income. The formula is the income from the business activity will be minus with all expenses to generate the income. For example, the seminar fees minus with the rental seminar hall, and then we deduct with the common expenses using a restricted formula as I show you in this illustration, and then
After that, we get the adjusted income. And after we get the adjusted income, we can minus with the capital allowance. And then we can get the statutory income. Then the chargeable income is RM350,000. How I get this chargeable income is the total amount of statutory income of seminar fees and trade association activities. The amount of statutory income of seminar fees is RM190,000 plus with the amount of statutory income of trade association activities is RM160,000, and then the chargeable income we get is RM350,000.